In this video, we will discuss the accounting principles and financial statement formats recommended by the Accounting Standards Board of ICAI for not-for-profit organizations, NPOs. These recommendations are aimed at fulfilling the information requirements of different stakeholders. Over the years, NPOs in India have become major players in development of the country and have experienced exponential growth. A sound accounting and financial reporting framework for NPOs acts as an important ingredient for promoting accountability of an organization. With the introduction of requirements of corporate social responsibility under the Companies Act 2013, NPOs now have a bigger responsibility to manage and report on their financial resources. This is important for both society and the people who have an interest in NPOs. Also, with the recent announcement by SEBI regarding framework for social stock exchange in India, NPOs are being governed by laws and regulations similar to for-profit organizations. Applicability of accounting standards to NPOs. For NPOs incorporated under Section 8 of the Companies Act 2013, Indian Accounting Standards or Accounting Standards notified under Companies Act 2013 are applicable. For non-corporate NPOs, accounting standards prescribed by ICAI are applicable. Accounting framework for NPOs. Non-profit organizations often get grants, donations, and other income. This money can either be used without any conditions or come with restrictions set by the donors. When restricted, these funds can only be used for specific purposes and cannot be used for the organization's general needs. Additionally, non-profit organizations may face legal or other mandatory requirements that dictate the use of specific amounts for designated purposes. NPOs might also voluntarily allocate unrestricted funds for specific purposes. For appropriate presentation and disclosure of the funds in the financial statements, it is necessary to understand their nature and characteristics, which is described below. Unrestricted funds. These are the funds given to an NPO without any particular restriction. These can be further classified into three categories. Corpus. These are funds typically provided by the founders or promoters to initiate the NPO. Usually, no repayment is anticipated for such grants. Designated funds. These are funds reserved by the trustees or management of an NPO for particular purposes or to fulfill future obligations. General fund. Unrestricted funds other than designated funds and corpuses are part of the general fund. Restricted funds. These are the funds on which donors impose conditions on the funds and the NPO agrees to follow these conditions when accepting the contributions. Elements of financial statements of an NPO. The basic financial statements relevant to an NPO are balance sheet, income and expenditure account, notes, other statements, and explanatory material that are an integral part of financial statements. They may also include supplementary schedules and information based on or derived from and expected to be read with such statements. In addition, NPOs should also prepare a cash flow statement in accordance with Accounting Standard AS3, cash flow statements where applicable. Balance sheet. It provides a snapshot of an NPO's financial position at a specific point in time. It presents the NPO's assets, liabilities, and funds which reflect its financial resources and obligations. In the balance sheet, assets and liabilities should not be set off against each other even though these may be related to the same program or project. Rather, these should be disclosed separately. Movement and balance of various funds should be distinctly disclosed in the balance sheet under their respective category. Formats of balance sheet for NPOs. Income and expenditure account. It is a nominal account which is prepared by an NPO in place of a profit and loss account. The income and expenditure account should contain all revenue, gains, and other income and expenses and losses incurred by an NPO during the accounting period. Since fund-based accounting is preferred for NPOs, it is recommended that the income and expenditure account should have 3 columns, namely, unrestricted funds in NPOs generally consists of general fund or otherwise known as capital fund, restricted funds, and total column reflecting aggregate income and expenses of unrestricted funds and restricted funds. NPOs can further classify the unrestricted funds column in the income and expenditure account into general funds and designated funds. Format of income and expenditure account for NPOs.
For details, refer the link given below.
It may be noted that the above-mentioned formats do not apply to NPOs for which separate pronouncements or formats have been issued by the relevant statute, concerned regulator, authority, or specific accounting pronouncements have been issued by the Institute of Chartered Accountants of India, ICAI. However, such NPOs are encouraged to follow these formats to the extent these are not contradictory to such pronouncements or formats. To conclude, this video suggests using proper accounting principles and financial statement formats that consider the unique nature of non-profit organizations' activities. This approach aims to standardize accounting and reporting practices for NPOs and enhance transparency within the sector. We hope this video proves valuable to all stakeholders involved. Thank you.